Do you know when the next economic crash is going to happen? Or just how bad it is going to be? The Bezzle, or more particularly, the ending of the Bezzle, may be one of the best predictors of a stock market crash that has been discovered. The Bezzle is a term coined by the economist John Kenneth Galbraith in his book, The Great Crash of 1929. The book looks at the economic boom of the 1920s, the economic and stock market crash of 1929, and the aftermath of the collapse. We should start with an understanding of the Bezzle. Bezzle is a contraction of the word embezzlement, which Galbraith described as the most interesting of crimes. In his own words, Galbraith explained,
Alone among the various forms of larceny, embezzlement has a time parameter. Weeks, months, or years may elapse between the commission of the crime and its discovery. This is a period, incidentally, when the embezzler has his gain, and the man who has been embezzled, oddly enough, feels no loss. There is a net increase in psychic wealth. At any given time, there exists an inventory of undiscovered embezzlement in, or more precisely not in, the country's business and banks. This inventory, it should perhaps be called the Bezzle, amounts at any moment to many millions of dollars. It also varies in size with the business cycle. In good times, people are relaxed, trusting, and money is plentiful. But even though money is plentiful, there are always many people who need more. Under these circumstances, the rate of embezzlement grows, the rate of discovery falls off, and the Bezzle increases rapidly. In depression, all this is reversed. Money is watched with a narrow, suspicious eye. The man who handles it is assumed to be dishonest until he proves himself otherwise. Audits are penetrating and meticulous. Commercial morality is enormously improved. The Bezzle shrinks.
What Galbraith discovered was that undisclosed embezzlement per dollar had a very powerful stimulating effect on spending. After all, the embezzler spends more because he has more income, and his victim spends as before because he doesn't know any of his assets are gone. However, when times get tough, this process starts to reverse, and the speed of its unwinding can be rapid, and you may have noticed times have been getting pretty tough over the last couple of years. The question you may now be pondering is, how can one identify the beginning of the process of the unwinding of the Bezzle? One of the first things we can look at is the significant increase in short seller activity over the last couple of years. You may have heard of Hindenburg Research, Muddy Waters, and the plethora of other such firms publishing research papers identifying corporate fraud and misdemeanors, or at least allegations of such behavior. The allegations of misbehavior published by these firms is significant. Hindenburg Research published a paper in January 2023 alleging wholesale stock manipulation and accounting fraud at the Indian conglomerate Adani Group. The paper was a bombshell which resulted in the various companies within the Adani Group suffering share declines from 25% to 70%, and reducing the market capitalization of the conglomerate by a staggering $100 billion. This was followed in March 2023 with a paper about Block, the fintech company founded by Jack Dorsey, formerly of Twitter, alleging the company overstated user counts and facilitated illegal activities on its platform. This report resulted in a 22% one-day fall in the share price. This was followed in June 2023 with a paper on Tingo Group, the Nigerian fintech, accusing the firm of fraudulent practices, such as allegedly fabricating financial statements, which resulted in an immediate 80% fall in the share price, and a total fall of 94% over the following months. It also resulted in the Securities and Exchange Commission suspending trading of the shares on the Nasdaq. Next in their sights was Freedom Holdings, the Kazakhstan-based financial services firm, with similar allegations of corporate malpractice, and which resulted in a near 5% fall in the share price. And most recently, in August 2024, Hindenburg alleged accounting failures at Supermicro Computer, which resulted in a dramatic 25% fall in the share price and the resignation of the company auditor. And that's just 5 recent reports from a single short seller. Muddy Waters, another such firm, has published similar papers alleging misconduct at Eurofins Scientific, Freedom Holding, Futu Holdings. And then there's Citron Research, Blue Orca Capital, Carisdale Capital, Spruce Point Capital, Grizzly Research, Viceroy Research, Wolfpack Research, and Bonitas Research, to name just 10 from an ever-expanding list of firms specializing in exposing allegations of corporate malpractice. And it appears they have all been kept very busy over the last few years. In addition to these short seller reports alleging corporate malpractice, we can also look at outright Ponzi schemes. We can briefly return to our friends at Hindenburg Research, who recently published a damning report alleging billionaire and famed corporate raider Carl Icahn of running a Ponzi scheme through his corporate holding company Icahn Enterprises. The report alleged the company was significantly overvalued, with its market price inflated by more than 75%. Hindenburg claimed that Icahn's firm operated in a Ponzi-like manner, by using funds from new investors to pay dividends to older ones, thereby giving an illusion of stability. The report resulted in a 60% fall in the stock price. There have been a multitude of Ponzi schemes in the crypto space, from the machinations at FTX to the recently prosecuted Adam Brothers, whose imaginary trading bot that promised 13% monthly returns was in reality a Ponzi scheme that defrauded investors out of $60 million. National Realty Investment Advisors was uncovered as a Ponzi scheme earlier this year. Founder Thomas Nicholas Solzano has now admitted to defrauding more than 2,000 investors out of $658 million. And over in the UK, investment firm London Capital and Finance, which was supposed to invest in low-risk corporate bonds to provide investors with a steady stream of income, was exposed as £237 million Ponzi scheme which has defrauded more than 11,000 investors. Touted as the biggest Ponzi scheme in British history, the scam was only discovered when the company collapsed into insolvency because too few new investors were committing capital to keep up the payments to existing ones. After Ponzi schemes, we can also look at outright corporate fraud. One of the most staggering cases of recent years was perpetrated by Lithuanian white boy Evaldas Rimasauskas. This man managed to scam Facebook and Google out of $122 million since 2013. You may wonder what type of Ocean's 11 style of intricate scheme did this man deploy to achieve this success. Well, Evaldas simply sent invoices to Facebook and Google, and they paid them. That's right. Over a period of several years, Facebook gladly paid fake invoices of $99 million, and Google paid $23 million. This scheme only came to light when Evaldas's banks started receiving so much money they became concerned and reported the transactions to the Lithuanian authorities, who promptly arrested Evaldas, and the scheme was exposed. He now faces a 60 months prison sentence and a forfeiture notice of $76.2 million. We can also see with Securities and Exchange Commission, where whistleblowers of corporate financial crimes receive up to 30% of fines levied by the SEC, that such whistleblower payments reached a record $600 million in 2023. This included a payment of $279 million to a single whistleblower for uncovering and reporting financial malfeasance in their company. Additionally, the Federal Trade Commission reported that Americans lost more than $10 billion to scammers in 2023 alone. And a report by the NASDAQ estimates global bank fraud cases exceeded $480 billion in 2023. All of these cases have recently come to light, shining a light on the Bezzle. And it does seem there has been an absolutely huge Bezzle accumulating over the last few years. But that amount seems to be reducing at a rapid clip, now that the good times are over and people are starting to view things with more suspicion, and increasingly detailed audits are revealing corporate fraud, malpractice, and Ponzi schemes on an extraordinary scale. As a final thought, looking toward the possibility of a significant market correction, the Buffett indicator, which compares the total value of the U.S. stock market to gross domestic product, is currently at 210%, one of the highest levels ever seen, and compares to just 140% during the dot-com bubble and 110% during the 2008 financial crisis. We can also see the U.S. debt to gross domestic product is 120%, and such a heavy debt burden during a period of higher interest rates could prove to be problematic. So, to answer our original question, when is the next crash going to happen? Well, it looks like the process has already begun and the Bezzle is starting to unwind. As for the size of the crash, When we consider the size of the bubble we're currently in, it could be very, very large. Anyway, happy investing. Until next time, don't go broke.